Alright, so in this video we will record our journal entries when we're dealing with expenses. So the first thing we need to note when we're doing journal entries is you need to understand that every transaction in accounting has a debit and a credit, and we have a matching principle that says that all your debits have to equal your credits. So the reason why that is for example, I have $50,000 that came into my bank account, and what went out of my bank account, so this was what came in, and then what went out of my bank account was $80,000. Okay, so there is an error here because we have $30,000 that is not accounted for. Where did we get this money? Because we only got 50,000 in. So this is where the debit and the credit principle comes in, because we need to account for every transaction. So it's going to show us that we received $50,000 on the debit side and then $80,000 on the credit side. So there's an imbalance. Okay, so that's why the debit and credit system was introduced, so you can keep track of what you received and what you have given out. So every single account or every single category has its own credit and its own debit. So when we're dealing with our expenses, I have a video on this, so please check out that video first before we go into this video so you can just get a better understanding. So for our expenses, the special designation for expenses when we are recording it is they will always be debited. Alright, so that's just a rule. So whenever you are paying off your expenses, you have more expenses to pay off, they will always be debited. And then in this case, since it says we'll be dealing with cash transactions, we know that our cash is an asset because it's ours, it belongs to us. Okay, so assets, normally they will always also be debited, but in this case, whenever you see a reduction in your assets, you will do the opposite and credit. So please check the right hand corner of this video and go check that video first before we go into these journal entries, as that is really important. So let's get into it. So number 1, purchased office supplies for $250. So 2 accounts, we purchased office supplies and then we purchased it with cash. So office supplies is an asset, account is an expense, so we will debit our office supplies with $250, and then we are going to credit our cash because it tells us that all the transactions are done by cash. So we are going to credit our cash because money is going out of our bank. Okay, so we are $250 less in our account. So number 2, paid $500 for monthly rent. So rent is an expense, you have to pay it every month, and rent, we are gonna debit rent. So this is our rent expense or rent payables of $500. Okay, and we paid this rent with cash again, so we will credit our cash because money is out of our bank, we have less cash, we are down with $500 again. Transaction 3, so this will always be the same. So whenever you're dealing with expenses and you're paying off your expenses, you are always going to credit your assets as it's becoming less. All right, and you will always debit your expense account. So transaction 3, we paid $100 in wages to employees, so debit our wage payable, so just your wage expense, and then we credit cash once again, and that is 100. And then number 4, paid $200 for a 1-year insurance policy. So we are paying this insurance in advance, okay, for 1 year. So we say debit our insurance, and then we are going to credit our cash with $200 200. So this is just your standard format when it comes to your journal entries. And our previous, the last question we had to do was, we purchased a new computer for $1,000. Purchase new computer for $1,000. So last question 5 is, we purchased a new equipment for $1,000. So this is kind of different. It's not really an expense. So in this case, we are acquiring new equipment, so we have to debit our equipment account, and this is an asset. So if you check that first video that I recommended, this would really make sense, and not only for expenses but for so many other accounts, so liabilities and incomes, and you'll be more familiar with that. So you debit your equipment, this is an asset, and then you're going to credit your cash because less money in the bank with 1,000 and 1,000. So you would do journal entry. So in this case we would say purchased equipment with cash at $1,000. So this would be your journal narrations. So you always add narrations unless not specified, and this is how you're gonna record your asset with journal entries. So please watch the video. I'll add it again at the end of this video on when to know when to debit or credit an account, because that is super important. Please subscribe for more videos.